Hello, everyone. Welcome to another episode of the Eitel Insights podcast. Another week is upon us, which means another torrential September Vancouver downpour is upon us as well. So we'll get right into it. We do apologize for missing a week here. It's been a little bit busy in the offices, but we've got Dane, we've got myself, Andy Park, your podcast host. How's your week been, Dane?
It's been excellent, actually, Andy. Spent the weekend over on the islands, had a friend's wedding that we attended, and it was a very nice ceremony.
Interesting.
Yeah.
Now, was there any interesting discussions you've had at the wedding? From what I understand, it was a bit of a real estate industry bigwig gathering.
Well, you know, the gentleman that was getting married, he's a manager of a fairly prominent brokerage around town. So, there was a good gathering of the real estate community, let's say. So, yeah, it was always fun to chinwag with some old friends and make some new ones.
Cool. Sounds good. So getting into the data again. So last time we discussed the detached market, but we actually didn't hit the condo market. So that's what we'll be focusing on today. Naturally, a lot of people get interested in the condo data just due to the price points. I think in every major city, there's a lot more people that are interested in the condo data, even though, you know, the purchasing prices might be a little bit lower than the detached, and the condo data might be a lagging indicator for, the other way around. But with the condo data itself, are we following the similar trends that we talked about in the detached market last time? And what are some of the differences, and what happened in August here?
Yeah, so I mean, the August data did come in, and yeah, we apologize about kind of giving you a late update on the condo market, but the time only permits so much to be done in each day. So where we actually settled for the August price point was $651,000 and some change. Now, that's technically interesting, just simply because we're still around that middle threshold, which, you know, there's going to be a movement here upcoming, especially definitely over the next quarter or so, let's say. Now, why we can kind of say that is you see the charts on your screen here now. The downtrend indicated by the orange lines, it has kind of met up with that lower yellow line, which is going to probably hold as a temporary bottom, right? Or else it's going to break and not really show as a temporary bottom. What we've seen in the past, especially in the detached market in 2016 and whatnot, when the market does come down and test this possible bottom, we always like to refer to it as a middle term, the middle threshold, that it does break the downtrend and then kind of establish more of a conservative downtrend. And as we've stated before, detached does definitely lead the condo market. So in saying that, the detached market has a 3-line downtrend, the condo market only has a 2-line downtrend. So would it be impossible to see an increase from 651? No. Will we still be going lower longer? Absolutely. However, one of these two technical features, either the yellow line, the temporary bottom, or the downtrend line could be broken. Now, saying that the downtrend line could be broken, it's a fairly sharp downtrend, almost mirroring the uptrend that we established here when we took off in 2015-14, right? So that does make sense, and then you get into more of a conservative downtrend, similarly to the kind of sales, what we see. We saw the break of the falling knife trend and more of a conservative overall downtrend take place in the sales inventory, right, or the sales chart. So, you know, one of the two things will play out here over the next quarter. You don't really have to react to it necessarily right away. It's an interesting thing, and that's what we like to say, that we're offering actionable intelligence. Now, you can take advantage of this blip one way or the other, depending on which way it does go. If you're the investing type mindset, still lower longer is what we're projecting. However, and I mean, when we're talking about this, again, we're talking about Greater Vancouver averages, right? So Port Moody is going to react differently over the next month or two, over the next quarter or so, or year or so, compared to Burnaby. And Burnaby reacts differently than North Van, than New West, than all the individual cities. So that's where we do offer our reports, and you know, maybe your city's already broken the middle threshold, or it's already broken the second line of the downtrend, and all 3 lines have been established, and we can give you a even more precise exactness of where the bottom will take place and when, which is a unique thing that Eitel Insights does offer everybody, right? In those reports is, here's your trend, here's where the trend will be broken. Some charts, as we see in the condo market, I mean, data will show up, and we react accordingly. We haven't changed our charts in a long time. However, now that we see that we're at a point in time where something's going to react, right? So then we're going to see where it plays out. Is it going to probably set up a conservative downtrend? Possibly. Is it going to send the market lower and then test the upward of the 10-year uptrend, which is indicated by the black lines on the condo chart? So once again, very interesting, and that's why we say check in with us every so often. Check out with the podcast, check out our reports, check out the media that covers us, because there's always something interesting going on in one of the two markets, just in Greater Vancouver, let alone nationwide, which is what we cover as well.
For sure. So if we experience this blip, as you're calling, one way or another, whether it's higher or lower than we expect, how long do you expect that blip to persist? And, as you mentioned, if I understand correctly, you do think the downtrend will kind of reaffirm itself going forward.
Right.
Correct?
So, it's going to be lower longer. I would actually hesitate to call this upcoming movement a blip. We can see it more in the detached market as being a blip because it's still in the middle of all the ranges, right? So that's not necessarily a blip. This is more of a market creation, right? So if it does break this downtrend, then we're creating more of a conservative downtrend. Right. And then that kind of leads to where we've said, historically, that the condo market is likely going to be reaching its bottom in 2022.
Right.
We'll throw the chart up again here, and you can see that the chart really ends up in 2020. So it's quite possible to see that the market prolong itself into a more conservative downtrend. That being said, we're still only down 13% from the actual peaks. So that kind of indicates that we still have a much farther to go, especially with the inventory coming onto the market. So if it does break up, then we're still expecting it to very much go lower longer. It'll probably create more of that conservative downtrend. However, if it does break lower, then that's basically saying that, this downtrend is for real. And the next test will probably be around that black line, like I say, the top black line, which is basically the top of the 10-year uptrend that the market absolutely took off from in 2016. So it's kind of coming back to a reversion of normalcy, given a historic approach to the market, right? That will not likely hold as the bottom. As you can see, the orange lines are much lower than where we are now, and even where the 10-year uptrend is, right? So that's our kind of short-term projection. As everybody knows, we offer longer terms on individual cities and this kind of analysis all over the place.
Right. And just before this podcast, we were talking, and I thought one thing that you mentioned to me was quite interesting, and that whenever you see a temporary break of these trends, like, you never really know what's going on behind the scenes. So, for example, there might be a single $13 million condo sale that is kind of sold by a celebrity or something like that creates this temporary movement in the market, but that doesn't necessarily affect the common consumer, right? So, for example, like, Brock Besser just signed a giant contract with the Canucks, right? And if he buys or somebody sells, right, there's going to be these outliers that kind of remain in the data. So,
well, I will say one of the more famous real estate sales was when Luongo put his property up before he was traded, right? So, the real estate kind of is an indicator in that aspect as well.
Right.
Now, that being said, I will give the real estate board some props here. What they like to do, if there is an absolute anomaly like that, like say that there's a $23 million sale, they'll actually kick that one out because it's not a typical market sale, right?
So that's not included in the
right.
data.
But that being said, if there's a $50 detached $1 million property that should have been sold, but it's sold for $50, they kick that out as well, and they'll probably look into that one as some money laundering, right? To their credit, they try to keep it as here's the normal markets for that purposes, but that's kind of also up for debate, especially in the real estate community, with how they arrive at their data and when they actually disseminate that data. Because truthfully, you'll get the average price from that month's of actual sales. Right. But the sales numbers totals that you'll get will be sales from a couple of months ago, because the sales totals are actually on completions. However, the sales prices is on agreement, accepted offers, subject firm offers. So it's kind of odd how they do get their data, but I don't really want to get too hard on them. I believe they're doing the best that they can. So, but that being said, let's kind of get through, I guess, the rest of this data here.
So let's move on to sales volumes here.
Sales volume. Okay.
Same downtrend is happening. Walk us through what's happening with sales.
Sure. So what's interesting about the sales here, we'll put the chart up. It basically has broken out of that significant downtrend, and so that's that indicated by the red lines. That's what we referred to as the falling knife. The market's over, right? That was clearly true. Now we're into more of that conservative downtrend, right? The data came in at 1,120 sales for the condo market across Greater Vancouver. And that's still much lower than where we've been over the last 3 years, right? So, I mean, it's still lower longer. The buyers aren't buying with any fervor. They might when we see a 20% decline, and then we see that mitigation similar to the detached market. However, everyone knows, or it's kind of perceived common knowledge that this market's falling, right? It's not stable. It's not rising. I mean, somebody can argue that, and that's everyone's entitled to their opinion. It's fine and fair. That's what makes a bull and a bear. Just so happens that we have to be bearish on this market given the analytics, given the data, and given the work that we do. There isn't anything positive that's saying, yeah, this is earth shattering and the trends are going to reverse. Condo prices are going to snap to it and go higher longer, right? From this point in time. We could see an anomaly, as you say, a restructuring of the downtrend. However, it's still going to be a downtrend for sure, believe it or not. And that's what we've been historically absolutely accurate on, compared to even major banks. I mean, RBC, and they recently said this is the bottom. This is the bottom. We're going, wow, you missed that. Like, you're really going to miss it. This is actually a stress test mitigation. You have a couple of factors that are showing themselves unique in this market, but they'll be gone soon. And once those erode, there's no other impetus to move this market forward, right? So that's kind of what we're seeing. Back to the sales technicals. We're very much in that middle of the downtrend, very much so in the middle. So could it go higher? Could it go lower? Absolutely. This thing has room to move freely, but still in that negative sentiment of lower longer.
For sure. And if you want a full-blown analysis of what we're talking about, and you want to actually apply what we're talking about to your individual property, again, just to remind our listeners, the best place to start is to pick up one of Eitel Insights off-the-shelf reports at eitelinsights.com. It's a very simple, 2 or 3 click process. Go to the website, select the region you're interested in, make the purchase, and then you'll be able to see exactly what's happening in your region.
Now, if your region isn't mentioned specifically on the website, give us a call or give us an email in as well and say, can you do this? Because chances are, yes, we can. We just didn't want to make the list abnormally long. It's fairly long as it is. The only real problem with data that we do have is actually with Quebec data, which isn't really too curious of a thing, given how the national climate is on very many different things. Even the lottery is exempt in Montreal and places like that, right? So yeah, that's our only one that we have difficulty getting the data. Other than that, really nationally, we can get you the condo market, the detached market, even the townhouse markets in most major areas, and even sub areas as well.
Sounds good. So let's move on to inventory now. So naturally, kind of the counterpoint to sales volume is, how many condos are left on the market, right? So walk us through what's happened with inventory lately, and, are we seeing these kind of similar kind of jagged lines moving forward, and what does this mean for the long term?
Absolutely. So again, the chart's on the screen. So what you've seen here basically since 2018 is a rapid run-up of inventory. Right after it clearly broke the downtrend that was established 2015 with 3 lower bumps before that in the years previous. Then a snap to it. As soon as it broke the technical feature, it basically started to create that bottom, and now it's an impetus to set a new trend. And we see that trend continue out with the test of this bottom. This is actually, call it the 3rd or 4th test, depending on how you want to read or interpret the data here. This is a test, right? So are we going to, again, expand out and see a little bit more of a conservative growth? I would believe that we're actually going to see a rise back up. It might even just continue with the uptrend on the lower basis. But usually, given a soft summer, you're going to see a little bit of a rise into the September, October. Not monumental, but definitely you're going to see more inventory. And given the fact that there was really only 1,120 sales, yeah, there's not too much erosion of the inventory, so new inventory coming on is expected. And again, higher longer in this chart, right? Could it do a little bit of a hiccup here and extend itself out to be more of a prolonged trend? Possibly. But the previous 3 instances that it had the opportunity to do that, it adhered to the line and snapped to. So that's what we do expect, and that's why we love our charts. We put our lines out there, and until there's a rationale for the chart to move or to break a line, The charts actually just adhere to our lines. Like, data comes out and it bounces off the line after a quarter or so, so because there's some tertiary areas across Canada that we don't do that often. So, we'll get a report request. We'll put that through and it comes to my desk, right? So I see the data and I'm going, well, here's where we last updated. Input the data and it just adheres to the lines. Like, all we're really doing is explaining the updated data, where it is in the market cycle in particular area, and that's what we offer, right? And that's the cool part about our job, about my job in particular. I get to see the proofs in the pudding time after time right across Canada, right? So I mean, the fact that we live here in Greater Vancouver, of course, I have a fundamental feel of it as well, and that's why we offer this podcast for our listeners rather than just on a national basis. Plus, as you can see, time's limited as it is. So trying to do a national podcast or individual cities would be too time consuming.
So I've got a bit of a newbie question, and I suspect that a lot of our listeners have this as well. So how tightly coupled usually is sales data with inventory data? So kind of a novice like me, I would suspect that, for example, if you see a giant spike in sales data, you would see a corresponding downturn on inventory data, or do they behave independently? So in a bear market, for example, even if you have a ton of sales, if everybody's just unloading their properties on the market, do you see these kind of two movements completely independent of each other? Right?
Supply demand factors are a real thing, as you know, right? I mean, from the markets that you've been involved in. So yes, there is that kind of asymmetry, right? So when the sales are going higher, the inventory is kind of falling off. However, I want a piece of that. So the inventory can kind of keep up with the demand factors until the demand pushes through. Right. And that's one of our actual proprietary studies that we even keep in-house, is a supply-demand factor. And you'll see an actual break of it, where the supply has broken through the demand, and you're probably going to be in a bear market, versus the demand's broken through and the supply can no longer keep up. You have a hot market for probably a few quarters at the very least ahead of you, right? And so that's one of the ones that we use in-house to kind of give our prescriptions. Also, it's a very complicated and convoluted study, so the average person might not fully even understand it with our easier interpretation, which we offer with all of our reports. So basically how we kind of counteract that and still offer the information is, as you've seen with this podcast, the condo inventory charts and the sales charts independent. They do have their own trends, and that is still definitely actionable intelligence. The other study is really just for kind of in-house purposes, but very unique and really, as you say, I mean, supply demand moves markets, right? Yeah. So yes, it does jive and it does make sense, and that's why you hear other analysts and go, well, I mean, of course the market's going lower. It's like, well, where were you when the market changed? Right. And again, at the wedding, as there's other realtors, they said, well, one gentleman said, I believe I called the top of the market there as well. And we're going, that's great. Congratulations. Was it on paper? Was it published anywhere? Because if it wasn't and it was just kind of said between you and your ears, it doesn't really count. We actually, take the bull by the horns and say, here's our thoughts. We put it out in the public for public consumption. And not everybody loves our sentiment all the time. Developers, especially at the beginning when we were saying the market was going to fall off. Mm-hmm. Now that the market has fallen off, they're asking for our advice because they can take advantage of it, and not to anybody's detriment, to everybody's benefit. Mm-hmm. You buy at lows, you sell at highs. And that's from the public person to the investor to the developer. It's your personal motivation. We actually offer you a game plan that you can take advantage of, where everybody else is, well, I knew that. But nobody says it at the time. Nobody actually has the risk level to say, you know what, I've done enough research. I'll accept the risk of putting my thoughts out there. Mm-hmm. Everybody says, oh yeah, I did that too. But there's never any paper trail. We absolutely have a paper trail.
Yeah, for sure. And just a bit of a concluding thought is that, this is obviously a very emotional game here. And we get a lot of emails and comments, and when the market's not working in, a particular person's favor, excuse me, we might get a few comments that, are a little bit troll-like, but we understand, this is related to personal finances. And of course, when some of the analytics works in somebody's favor, then we get a lot of cheerleading, which we appreciate. But I would just encourage everyone to, try to keep emotions out of this, try to look at the data for what it is. And, I think Eitel Insights is providing very valuable information, not only to individual people, but for public consumption, as you say. So, try to be as objective as possible. And I think that's the best strategy to consume this information.
Absolutely, and we'll just kind of even make that a little bit. We really, and I think I've said it on podcast previous. We don't want to be negative Nelly. It's just that Vancouver happens to be in a negative position. If you want some positive news, there is other positive news. We've explained it on other podcasts, Halifax, Fort Mac. There's a couple of opportunities across Canada. And if you buy one of those reports and you're a bull, you might be happy. But it just so happens if you buy a particular report, it's probably going to be a bit bearish in Greater Vancouver. By what degree? That depends on which area it is, and that's why we do offer those reports.
For sure. And with that, we will conclude this particular podcast. We hope to turn one around pretty quickly here.
Absolutely. Yeah. Well, we got new data coming out in the next week or so.
10 days or so, right?
Yeah, so, we'll have the next podcast out here with the new data. We're always excited with new data.
All right. Thanks for listening. Give us a thumbs up, subscribe, and we'll see you on the next one.